Hello, I'm Alan Kohler, founder of Eureka Report, which is now part of Intelligent Investor, and finance presenter and columnist for the ABC.
And I'm Stephen Mayne, contributor at Intelligent Investor, founder of Crikey and shareholder activist. And we are
the
Money Café, Alan. We are indeed.
Now, this morning, perhaps a minute's silence for the person at the ASX who mixed up TPG, the telco company, with TPG, the private equity fund, and somehow managed to have TPG, the telco company, announce the acquisition of Infomedia, and the share price fell. So there's somebody at the ASX who did that.
Yes, quite a memorable stuff up. In terms of stuff ups, it's right up there. I mean, particularly when the stock then tanks 4%, ASX has got to cancel all the trades. I mean, I just don't remember anything like this ever happening before. So, rookie error, you could say, confusing a private equity firm from a listed telco. How that got through all the checks and balances, I mean, goodness.
Well, I do think one of them needs to change their name. It's quite confusing, but still. I mean, the trouble for the ASX is this comes at a time when it's not actually in the tickety-boo shape. It's getting sued by ASIC for all sorts of behaviour.
Well, that's right. I mean, it's getting sued. It's got competition coming in with the Canadian Stock Exchange looking to buy up the little rival, the NSX, challenges on their monopoly situation. So, it's even made the front page of the Australian regular section today as the whole ASX under fire. I mean, it's also noticed that UniSuper, which is one of their biggest shareholders, has just dumped 150 million ASX shares and reduced their stake from, I think it was 9% to 7.7%. So they're in a world of pain. And meanwhile, I mean, they're still worth $13.65 billion as we speak, Alan. So the government, I don't think, can come in and regulate that down to, halving the share price type thing. It's just too well established. So I don't think they'll get their monopoly taken away. But they do very much rely on the government monopoly, particularly on clearing and settlement. And other countries like the US have multiple exchanges. NASDAQ, New York, the Texans are setting one up. So is our model the right model with this monolithic monopoly that keeps making rookie errors?
Well, monopolies are never efficient. I mean, by definition, a monopoly, if you have one, it's going to be terrible. And sure enough, ASX is proving the truth of that kind of statement.
Yeah, and then you've got the issue of the sort of the hollowing out of the ASX. So as James Thompson, I think, or Shantikar wrote yesterday, the real issue is Infomedia, a mid-cap company, being taken over by private equity for $600 million. So the ASX is continuing to thin. Although I should say the data came out for July yesterday, and there was a net increase of 9 listings. So I think it was 16 new listings and 7 delistings. And that's the second month in a row they've actually managed to increase their listings after 21 straight months of declines. So the drop's only 9% now. Presumably
the new companies are all small and the ones getting taken over are much larger.
Well, that is another issue, yeah. And you've got, I went this week, for instance, to the Domain scheme meeting. So they've just been bought by a US company, CoStar, for, close to $3 billion. That's the big competitor to REA Group. Gone. Just disappears into a US multinational. And I asked the question of the chair, Nick Falloon. I said, is this a problem for the nation that Australia companies are just becoming a branch office of all these foreign players? And are you embarrassed that you're only worth 9% of REA? You've been here 10 years. Why didn't you do any better?
Well, that's 2 questions. What was the answer to each of them?
I'm not getting into that. We're just here to deal with the takeover. That's a bigger issue. And he was just playing the ultimate straight bat, and it was approved by 99.9% of voted shares, but only about 5% of the 12,000 retail shareholders bothered to vote. And I asked him if that was a problem, and he said, no, that's just normal. So, anyway.
Geez. You've been watching the Tim Cook and Trump press conference in the Oval Office, is that right?
Yeah, look, so we're recording this at 8:30 on Thursday morning. So just in the last hour, Trump had Tim Cook in the Oval Office. Cook announcing that previously they said they were going to invest $500 billion over 4 years in America, and now it's been increased to $600 billion. And they reeled off all the different states, most of them Republican. Every single Apple product, the glass cover is going to be made in Kentucky. So, so Oregon, Utah, North Carolina, Houston, they've already got 21 factories, and they're literally, it is a pretty powerful message for Trump to be able to stand there with Tim Cook and say, Apple's coming home, baby. And then Tim Cook to stand up and reel off all these investments that they're going to do. I mean, they're not going to assemble the iPhone because, as Trump said, that's already too far gone in terms of, China and India and everything else. But from the components point of view and data centers and, many of these big tech companies are responding to the tariff threat, because Trump just came out and said it's 100% tariff on chips and semiconductors, but we'll give you a waiver if you announce you're going to reinvest in America. And they're all doing it. And that's very politically popular.
So most of that, what Apple's going to do is make the glass in Kentucky, as you say, plant at a company called Corning, which is a famous glass company name. And so I asked, and the glass that is made in Corning is called Gorilla Glass, which is used on the front of various smartphones and so on. It's a special kind of glass. So I asked ChatGPT, to what extent is the Corning plant in Kentucky automated? And the answer came back, human hands never touch the glass in Kentucky. Corning's manufacturing strategy embraces manufacturing 4.0, featuring robotics, machine learning, and it's basically the plant is entirely automated. So the manufacturing renaissance that Trump is spruiking, and it's part of this morning's press conference, as part of that, is basically it's all about robots.
Well, it will be about robots.
So there's not many jobs going to be created, is all I'm saying.
At an operational level, yes, but certainly I would argue that the construction of a lot of these facilities, I mean, Trump was talking about how Apple is going to be its own electricity utility, so it's going to build its own, power plants next to its new data centers, and so, look, I think it is actually a material move. And Trump was claiming we're now up to $17 trillion of announcements in NVIDIA, $500 billion, IBM, $150 billion, TSMC, $200 billion. So he's just reeling them off. And he loves nothing more than, Japan. We're going to invest $550 billion. I mean, it turns out a lot of it's just high-yield loans. But that's the button that gets him going the most is inward investment by American companies, foreign companies into America. And we're getting some stupendous numbers being announced. In 5 years, we'll look back and actually see how much of this came true. But the big numbers are being rolled out, and it's pretty politically powerful.
Yeah, well, it's obviously coming true because they all want to get out of the tariffs. So, yeah, it's coming true. I suppose I'm just saying that it's not necessarily going to result in a lot of jobs. In fact, it's part of what's really going on in America is a sort of the tech boom, and the American economy is not booming as Trump asserts it is, but if you look at the stock market, you'd think it was, and the stock market's backed it towards record highs. But that's all because of AI and automation, which is what is being, in a sense, boosted by the tariffs. Is that they're moving, they're building factories that are automated. And that's going to result in more profits for the AI companies.
Virtuous cycle.
Interesting. It's a virtuous cycle, yeah. And it's so it's going to boost the stock market, I think, that's for sure. But perhaps not employment.
I'm just amazed how many billionaires are playing along with Trump. Even Trump this morning said Elon Musk is a good guy, even though they've been fighting. But the Rupert Murdoch versus Trump. Rupert's about the only billionaire at the moment who's in his crosshairs with the big litigation. I was amused actually that Rupert has promised, as part of an interim settlement out of the Miami Federal Court, Rupert has promised to give personal health updates on his health to Trump. because Trump initially said we need to depose him straight away because he might die. So they've had this short-term settlement where Rupert tells Trump how his health's going, and meanwhile they have a dismissal motion in a few weeks' time. And if the dismissal motion is kicked out, Murdoch has agreed to sit for questioning under oath within 30 days of that. So, these court cases move quickly. When you're Trump, you can just bang get Rupert to sit up and do deals. And
so does that mean that Rupert doesn't have to do a deposition?
Well, he's bought himself some time. He said, I won't do a deposition immediately because I'm going to tell Trump about my health. I mean, he should tell his family and the stock market. I mean, we'd all be interested to know as well, because he's 94 and still heads the most powerful media mogul in the world. And he's got a motion to dismiss the whole $10 million claim to start with. So he's trying to do a dismissal. And if the dismissal motion is rejected, then Murdoch's got to sit for questioning under oath within 30 days. But that's when discovery also starts, and that's when the team Murdoch would get all over Trump, Epstein, discovery stuff, which is the last thing Trump needs. So it's pretty interesting stuff, I got to say.
So yeah, but as you say, this lawsuit's about a Wall Street Journal article about Epstein files and the sort of the note the birthday note that Trump is supposed to have written for Jeff Epstein. Do you have a sense of what the rest of the Murdoch media is doing about Trump? Is Fox and the New York Post turning against Trump, or are they still on board?
No, Fox News is still totally on board. I mean, they've barely mentioned the Epstein thing because, I mean, their business model is just to be propaganda for Trump. But obviously the Wall Street Journal's been causing a lot of grief. I mean, a lot of coverage getting stuck into tariffs and all sorts of different policies. So they've been going very, very hard. New York Post, I think, less so. I think interesting that Rupert's announced he's going to set up the California Post, a new daily newspaper in California next year.
Is that going to be printed on paper?
Yes. A daily newspaper, the California Post, sort of a sister publication of the New York Post, but obviously can tap into the Wall Street Journal's paper printing and distribution networks in California. It's a very rich real estate market, and obviously they've got their REA Move, it's called over there, their real estate ads business. So, yeah, but I think that was also Rupert projecting his own power. And obviously he's going to go to war with woke, take on Newsom, try and be influential in who's the next governor of California because Newsom is timed out. And if Newsom is the presidential candidate, then the California Daily by Rupert will be out there ripping into Newsom every day. So interesting power play by Rupert at the time when he's under the pump from Trump with this Epstein litigation.
Yes. All right. So we'll get on to some more Trump stuff in the questions, I guess. But what else has been going on? You're in Brisbane at the moment. Is that right?
Yeah. Look, I've got this 20-day road trip. So I went in yesterday and had lunch at the Star Queen's Wharf Casino, the Brisbane casino.
What'd you think?
I only went up to the Sky Deck on level 23. It's beautiful views of Brisbane. It's free to go up there, and had a nice lunch with the man who invented the Patrio, a guy called Dave Goffich, who is a legend in my mind because he invented the fairest way to raise capital. It's called the Patrio, which is
Patrio is an acronym.
It's an acronym for, it's participating, accelerated, institutional, renounceable, blah, 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 blah. Basically, it is pro rata and it is renounceable, so you can sell your rights, and it is tradable, so you can trade your rights. So I wasn't even going to mention this, but Chanticleer had a column today saying that the Patrio is dead. This is a real shame, and we should bring it back because we've got all these sort of dodgy capital raisings and placements and non-pro rata. And I was interested, amused that I was having lunch with the guy who introduced it with Origin's issue. There's been 44 Patrios, but this guy retired 7 years ago, and the thing he created is dead. And meanwhile, we were sitting there looking at the Star casinos talking about the $4 billion that shareholders have lost in Star as it teeters on the brink of collapsing.
And telling each other what a pair of geniuses you are.
Oh, well, no, we certainly weren't doing that. But I was amused. There was all these CFMEU flags all over the site, and basically they've lost $4 billion. It's cliff-top poker as to whether Star's going to survive, because you've got regulators, you've got Asian billionaires, Bruce Matheson, the stock's at 9 cents, Austrac $400 million fine. They're still losing money in Brisbane. Will their license be suspended? So, while everyone's getting excited about AI and tech in America, what have we got here in Australia? Teetering casino companies. So, it was quite interesting to see the White Elephant site, which is probably worth $1.5 to $2 billion after $4 billion spent. So, yes. So anyway, but no, it's been a good holiday. I got crunched in the surf at Mooloolaba. The surf was enormous up there on the Sunshine Coast, and I know you wanted to talk about housing and planners. So I thought I'd just introduce an amusing little story. There was a development called Twin Waters just north of Maroochydore, where Tricontinental, the Victorian State Bank, lost over $100 million bankrolling that damn thing, because the John Avrams Interwest Group went broke after the pilots dispute, the Keating recession we had to have, and Victorian taxpayers got left with this half-built resort called Twin Waters. Anyway, 25 years later, the Twin Waters Residents Association have been running a 15-year war against Stockland's Twin Waters West proposal to build new housing. And it's finally been approved. It's finally starting, but they've got it down to only 405 homes on 104 hectares. And I met a guy from the Twin Waters Residents Association, said, yep, we killed it. We ran a great campaign. We knocked down that Stockland development. And I thought, classic tale of, how hard it is to get planning approval for new developments anywhere. Queensland, Sydney, Melbourne, anywhere, because you just have these massive 15-year fights, objections from the residents, VCAT hearings, court hearings, council knocked it back twice. But finally, Stockland is turning the first sod on earthworks on this development that was first mooted all the way back in 2008.
Yes, well, the governments of Victoria and New South Wales have both passed laws that basically give them the power to ride roughshod over all these objectors, and in particular in Victoria. I had lunch with the Institute of Planning people the other day, and they were saying that, I find this hard to believe, but they were saying that the government is able to now override heritage overlays in the leafy suburbs of Hawthorn and Camberwell if they're within a kilometre of the station. So what they're saying is that anything can be built within a kilometre of the station, and they've raised the height limits, and the heritage overlays that exist that protect the beautiful Edwardian and sometimes Victorian houses, but mainly Edwardian houses in those suburbs, can be overridden, which I'm going to have to do some more work on this. It's because that's incredible, really. I mean, if we start having, I don't know if you know Camberwell, there's houses up Broadway and Victoria Road and other streets that are quite beautiful. But if they get knocked over, there'll be absolutely people chaining themselves to the bulldozers.
Well, Geoffrey Rush and the late Barry Humphries were famously opposed to anything being developed in Camberwell. So 20 years ago,
they were. So, that's right. So it'll be absolutely on for young and old if that takes place.
Yes, but they'll need to do a lot more than that nationally.
But anyway, the planners were saying that the problem is not approvals. There's plenty of housing approved in Australia. The problem is getting them built, and there just isn't the construction capacity anymore to build the houses that are needed.
Yes, well, we've long known that. That's a world problem. UK, US, everywhere they're talking about the lack of housing, construction costs blowing out, et cetera, so it's everything. It's not just construction costs. It's not just zoning. It is absolutely everything. The price of land. But I do think there is something in that planning objector piece, and also the inability to simply rezone. The zoning is the problem. Single dwelling covenant is a shocking zoning thing if you want new housing, because there's so many blocks where you should have more than one house and it's got a single dwelling covenant over it. So I reckon they'd have a much bigger influence, not just going in and fast tracking approvals under existing zoning, but you need to actually rezone. But that is fraught with corruption, because the benefit of the rezone is often, the dodgy developer doing the backhander, sort of history shows. And so people are very reluctant to rezone because of the windfall gains. The farmer who's suddenly sitting on $500 million worth of land, and who gets to share the benefit of the uplift from the rezone. Now, Victoria's introduced a windfall gains tax, which is 50% of the gain from any rezone goes to the government in a new tax. They've tried to capture it, which is a start, but they've stupidly put that on councils as well. So if councils are going to rezone and try and get some housing going, they've got to give 50% of their windfall gain to the state government. So the councils keep saying, don't do that because we won't rezone. So it's all about the incentives. But I reckon rezoning is a key part of it. Now, finally, Elon Musk's new salary, just briefly mentioning that the board have come out and given him 95 million shares at $23 a pop, rather than the original 304 million shares at $23 a pop. And with the stock today at $320 a share, they've just given him a windfall of $27.5 billion. And that's only 1/3 of the windfall that he would have got if the wonderful Justice McCormick of the Delaware Supreme Court had not twice rejected this pay proposal, which had twice been approved by the shareholders of Tesla, which is now up for appeal again in the Supreme Court in Delaware. But the board is sick of waiting for the justice system to sort itself out and said, we need to keep Elon. We've locked him up for 2 years. We've given him this $27 billion windfall. It's only 1/3 of what we're going to get before. He can't sell the shares for 5 years. And we really can't afford to lose Elon. And the stock's worth $1 trillion. And a lot of that is all about the upside that people think Elon will deliver through robotics and automatics and self-driving cars and all that sort of stuff. So richest pay deal in history, only 1/3 of what it once was, still before the courts. Only in America could all this stuff happen.
Yes, poor Elon.
Poor Elon.
It's 1/3 of what he was going to get.
Yeah, poor Elon. Richest bloke in the world. Working for nothing, the poor bloke, since 2018. It is the richest pay deal ever.
Yes,
but, is he going to go off and run? Is he going to go off and run Twitter, run SpaceX? Politics. There are distractions from Tesla. So the board of Tesla does have to sort of keep him in there. The stock price is priced for perfection, all about Elon upside. So at some levels, I actually get the point that they can't afford Elon to say, I'm resigning, I'm selling my shares, and I'm putting all my effort into a startup to compete with Tesla. It's a joke. I mean, if he said that, the stock crashes by 70% overnight. And that's what they're trying to avoid, I guess.
Yeah.
Yeah.
Now, before we get on to this week's questions, here's a quick word from our sponsor.
Earning a steady growing income from investments is a goal for many Australians. If you want to learn how to build a higher, faster growing dividend stream, join Nathan Bell, Portfolio Manager of Intelligent Investors Australian Equity Income Fund, for a live webinar on Thursday, August 14 at 1 p.m. Nathan will explain why chasing yield alone can be a costly mistake and share tips on how to spot overlooked income opportunities. Plus, you'll have the chance to ask Nathan your questions in a live Q&A. Register now at offer.intelligentinvestor.com.au/INIF.
Okay, Barbecuea says, lads, from my question last week, I seem to have my definition of productivity wrong. Can you explain it to me like I'm a 5-year-old? Well, yeah, there are two types of productivity, the way it's mentioned. There's labour productivity, which is simply GDP divided by population or by the working population. And there's multi-factor productivity, which is bringing in everything in, including capital equipment. And it's a more complicated, it's a much more complicated sum, which is more difficult to do for ordinary people. It's simply the ratio of output to a combined measure of input, such as capital investment as well as labour. Got anything to add to that, Stephen?
No, well done. Good question, productivity. Question 2 is from Jackson, moving right along. Treasurer Jim Chalmers' upcoming economic roundtable centres on productivity growth, mostly through changes to taxation. I recently read some analysis on the impact of climate-fueled disasters, which is clearly impacting productivity measures. And then Jackson goes on to talk about Cyclone Alfred, the Black Saturday bushfires and various other disasters which smashed the economy, and saying when a government's going to contemplate the financial impacts of climate-fueled disasters in looking at the economy. So it sort of ties in with the productivity question. I mean, the upcoming 25-person Gabfest, Alan, are you comfortable and happy with how it's rolling out and who's there and the topics that are being covered?
Oh, yeah, it looks okay so far. I mean, the question is what comes out of it. I mean, are they going to make decisions around the table, or is it just a matter of collating all the ideas that everyone around the table come up with, and then Treasury goes away with Jim Chalmers and they come up with, okay, here's what we're going to do. I mean, it's a bit hard to know what exactly is going to result from those 3 days. But as you say, it's a Gabfest. They're going to talk, have presentations. I mean, I presume it's a kind of a quick or a sort of a small version of various summits that have been had, where they get hundreds and hundreds of people in a room, and the idea, I think, of those as well as this one is to just lock people in to what the government was going to do anyway, and I guess that's what Chalmers is trying to do, is get the leaders of various business lobbies and the community around the table and to lock them in behind what he wants to do.
I think the business community sort of felt they got a bit done over last time on industrial relations reform. There was sort of a range of changes that were put through that weren't particularly promised before the first election of the Albanese government, and they sort of got political cover to do some of that coming out of a big summit they ran in the first term. So there's a bit more caution. My sense of it is this time it's going to be more leading to a tax package that may well go to the next election, sort of Howard 98 GST style, but not as comprehensive. Because quite a few kites are being flown on different tax models, the big business tax versus the small business tax, a cash flow tax. Tanya Plibersek, too many rich people are on the pension. Will they do something on trusts? Well, that's my sense, is that all these thought bubbles that we often discuss will get worked over, and the government will be bolder at the next election with actually a tax reform package, bigger and broader than just unrealised capital gains in super, which is the only tweak in tax from the last term, except for rejigging the stage 3 tax cuts. Because by the time we get to the next election, there will be a whole bunch more bracket creep pumping through the system. Our over-reliance on income tax and to a lesser extent company tax will be as evident as ever, and we'll still be in structural deficits, particularly state and federal, 100 billion a year, huge, big structural deficits that are unsustainable. And how do you fix that?
I do think that if they spend 3 days talking about tax, it'll be a wasted opportunity. It's supposed to be an economic reform roundtable, and there's plenty of stuff to do. And Chalmers raised the AI question yesterday when he said, he had a press conference and talked about how AI is a game changer. That's what they need to talk about, and how they're going to respond to AI. What's the government's role in that? What does the government need to do to assist companies to do it, to implement AI? Should they regulate it? To what extent should they regulate it? I mean, so lots of discussion around economic reform and AI, and tax seems to me a separate issue. I mean, I know that tax related is a contributor to productivity and reform, but they're just simply in the same situation as they were in 1985 and 2000, where they're not making enough revenue from the existing tax system. They've got to increase revenue, so they have to decide whether they're going to introduce a new tax or increase the GST. That's basically the decision. And if they talk about that for 3 days, I think it'll be a waste. They just need to put out a white paper perhaps a green paper to start with. This is the process of economic policy. Green paper followed by white paper, have a discussion, and then do what they need to do. I mean, the business of the capital gains tax discount and negative gearing, those are housing issues. I do think that they need to be addressed, but they're not going to raise that much money, a bit of money, but really, it's to be honest, it's really a question of a wealth tax versus GST increase.
I would agree with all that. And on the productivity piece, I mean, AI is the single biggest driver of what will improve productivity all over the world. And my sense is that the stock market is popping on a lot of those sort of assumed cost savings, productivity gains, profit growth from automation, robotics, AI, et cetera, but the question on everyone's lips is the smashing of particularly white-collar jobs. And I just don't see how a government can stand in the way of that. You know, the ACTU saying, you know, you've got to get worker agreement before you can do it. I mean, that's just not realistic. I don't know how do you stop it? I mean, everyone's got enterprise agreements on consultation, that's the stuff, but you know, it's just if we just pretend it's not going on, we'll just get out-competed and we won't be competitive globally.
Yeah.
So you know, I think it's going to wash over us in a major way, and there's going to be quite a bit of pressure on governments to provide more support for people left on the scrap heap. But again, that goes to increase social programs. Have you got the budget capacity to do that? Now, Cameron says, thank you, Alan, for raising the issue of illicit tobacco sales in your most recent analysis piece on the ABC website. I wish to point out another angle that hasn't been raised around this issue. I live in an apartment building above a commercial premises that in the past year is believed to have been involved in selling illicit tobacco. As a result, our Owners Corporation building insurance has gone from $32,000 a year to $125,000 a year. Over the 20-odd unit owners, it will cost an extra $4,000 per year. So Cameron is
Crikey, that's terrible.
An insurance slug because he's in a building which appears to be at risk of being firebombed by the criminal gangs that have got 50% market share in illegal tobacco. And I don't know. I mean, I was going to mention on this that this whole sort of Australian tobacco situation, it's a classic example of show me the incentive and I'll show you the outcome. So why does Australia have the lowest smoking rate in the world? Or how did we get to that after 70% of Australians were smoking at the end of World War II? And the answer is that because the federal government was involved in the cost of smoking through Medicare and through Medibank when they owned that, in the biggest health insurer. And the state governments were picking up the cost in running all the hospitals. You had a unity ticket between the state and federal government to smash tobacco smoking rates because the governments were picking up the health cost. So they introduced the toughest anti-smoking regime in the world and saved a lot of health costs. But now we've got this perverse outcome of the taxes are so high, 50% market share has gone to organised gangs with their illegal tobacco. And the contrast with gambling, why are we the world's biggest gamblers? Because no government picks up the cost of that directly, and the state government is desperate for revenue because we've got this lopsided federation where the feds raise all the money and the states do most of the work. One of the few things the states can do is issue gambling licenses, and because they don't pick up the cost of that, they issue them like confetti, and we're the world's biggest gamblers, but none of them smoke. So we lose $31 billion a year gambling, which is the worst in the world, but our smoking rate is the best in the world. And one reason the state governments are not helping to crush the illicit tobacco criminal gangs is because they don't get the tobacco revenue. They haven't got a slice of the upside. So the feds should say, we'll give your police force 30% of all of our tobacco revenue for every extra dollar of tax collected. And I bet you'd find the state police forces would be crushing all of these bikie gang and illicit operators because they don't have any economic incentive to do it, and it's been allowed to get out of control. And now people like Cameron are copying massive increases in their Owners Corporation insurance because there's endless fire bombings of tobacco stores in Melbourne particularly.
I don't know about the lowest smoking rates in the world, because one of the people I spoke to for that tobacco column for the ABC told me that wastewater studies have shown that Australia's nicotine use is at a record high. So nicotine use hasn't declined. And maybe smoking's gone down, but it's vaping. There's a huge number of vapors in Australia, and they're buying their vaping equipment from the same stores that are selling illicit tobacco. And so there's two product lines in these joints that the gangs are involved in. Firstly, the imported cigarettes that they're selling for $10 a pack instead of the usual $50 or $60 a pack, and also vapes, which now vape's not entirely banned, but if it contains more than 20 milligrams of nicotine, a vape has to be bought from a chemist on prescription. You have to get a prescription from a doctor and then go to a chemist to buy it. And out of the tens of thousands of chemists there are in Australia, only 700 stock vapes. So it's virtually impossible to get vaping stuff legally. So that's just become another product line of the gangs.
Yeah, that's right. So our nicotine consumption is going up because we've let the gangs sort of working a little bit in cahoots with big tobacco in terms of encouraging vaping, etc. All working together to encourage young people to consume nicotine, but not through the traditional smoking methods. So look, I think they just should slash the tax for a bit to encourage regular smokers back into their 7-Eleven or their Coles or Woolies, and just cop the revenue loss for a bit. But they're just so ideologically on board with this, tax them out of existence that even when they've lost 50% market share with the gangs, and still the feds are saying, "Oi, it's up to the states, to the state police forces to go around and arrest, a few thousand people manning tobacco stores involved in this very, very sophisticated and broad national supply chain, which has now popped up to undercut the state, the federal enormous tax levels that apply to tobacco."
Caleb says, in the last few weeks, you've copped some flack regarding golf courses. I wanted to offer some encouragement, because you're dead right that it's crazy how underutilised many of our urban areas are in this country. One suburb near me is almost entirely low-density housing, and the only green space is the golf course, which is fenced off and private property, meaning if you're out for a run in that suburb, you can't walk through to the shops, but instead have to drive 8 kilometres around the golf course. Even if they aren't used for housing, with many people in this, with more people in the cities, we should be using these for parklands and bikeways. Yeah, fair enough.
And it's funny. We had a question later on from Brad, who similar line, and he's proposing a couple of catchy YIMBY-esque acronyms. The first one is GOLD, golf out, land for dwellings, and the other one is GONE, golf out, new estates. And Brad is happy to receive all the hate mail, Alan, that you've been getting from passionate golfers. But look, I agree. I think that it's interesting. Where I'm staying in Brisbane at the moment, you go down the end of the street and there's what looks like a public park, but it's got a giant private property keep out, and it's a big Catholic school with huge sporting ovals. And of course, you cannot come onto our private school ovals or walk the dog type thing, and that really annoys me. I think there should be a rule that if you want to receive a rates holiday or be exempt from land tax, all those benefits that golf courses often get discounted rates as well. That one of the part of the deal for the discount on tax is you've got to have public access, reasonable approach to public access, and that includes people being able to walk through golf courses, walk onto the local tennis courts, walk through the private school. You don't allow private beaches to be closed off. So so a happy compromise might be a policy of private golf clubs, tear down your fences, tear down those walls, and let people walk their dogs, and hopefully avoid the flying golf balls.
Your turn, but probably go straight to Alicia.
I think so, yes. Alicia says, thanks for such a thought-provoking podcast. I listen every week. Do you think a tax on sugary drinks in Australia could happen soon? I read that 108 countries have applied it, and in the UK it's halved childhood consumption of soft drinks. Surely it's a no-brainer, considering the impact they have on dental and cardiovascular health. Look, it is strange, isn't it, Alan, that we've put a massive tax on tobacco, world's highest, yet we haven't gone for the sugary drinks tax that many other countries have done. Is this just the power of Coca-Cola and the cereal makers? Why haven't we done this seemingly obvious tax the sugary drinks reform in Australia?
It's not as if we're, as you point out, it's not as if we're averse to whacking taxes on things we don't like. I mean, or things that are unhealthy. It's amazing. I mean, there was a piece, I think it was Four Corners, had somebody had a thing saying that the artificial sweeteners that are used in drinks that have zero sugar in them are also bad for you. So maybe the tax should be on both sugar and artificial sweeteners. Maybe some of our listeners can advise us on that as to whether that's a good idea.
I just think it's sort of tricky getting into the mechanics of doing it, when intersected with the GST, where you draw the line. I guess with GST, we've got fresh food exempt and processed food not. But it's like, we should do a list, Alan, all the things that are common all over the world but don't happen in Australia. And the top two would be this sugary tax drink and then inheritance taxes. Like, it's just so standard to have an inheritance tax. But for some reason in Australia, when we did the GST, I think we were one of the last countries in the world to even do that. So we're often very late. We're very late to the game with many of these no-brainer tax reforms. So it points to maybe we should.
We had an inheritance tax for 60 years, from between 1915 and 1975, both state and federal. But both of them were abolished in the 70s by Joe Bjelke-Petersen and Malcolm Fraser.
And if you were bringing it back, I think I like the fact that in America they have state income tax. So it's very high in New York, it's lower in Texas and Florida. It does allow for competition, but it also, imagine, being the payroll officer at Walmart and having to deduct the pay of your staff, and every state has a different level of income tax that you're taking out, or, some for the Fed, some for the state. So I like the fact that the High Court knocked over the state income taxing power after the Second World War, I think it was, and only the feds can do income tax. Only the feds do company tax in Australia, and I would argue only the feds should do inheritance taxes if they are ever introduced, as they logically should.
Santia asks, just going to the last one, Santia asks, you must get asked this all the time, so I apologise in advance, but where do I find a sane and intelligent financial advisor to help me? I've tried Rask and also Host Plus, but neither feel right. Can you please tell me where I'd find this? Well, I'd suggest using ChatGPT. I actually asked ChatGPT to give me a list of all of Australia's best financial advisors according to the various assessments and awards and so on. And it did. It was great. It gave me the winner of every single financial advisor award that's ever been done. And it was a very, very good list. So try that.
You can also get some help from the Intelligent Investor or InvestSMART. Not so much advice, I guess, but investment products, risk safe ETFs and those sorts of things. I do agree. I think actually that we lost too many financial advisors with all those sort of the regulatory overreaction after the Royal Commission. We lost thousands and thousands of financial advisors because it just got too onerous to be in the game. It was previously too easy to get yourself a ticket to call yourself a financial advisor, but it's probably gone a little bit too far the other way. And we do need a few more. I think all the industry funds really should. They do offer financial advice. I reckon they should invest heavily in financial advice capacity. Your trusted industry fund would be a logical place to go, because there's people do worry about, can you trust them? Are the fees too high? The reputation of the sector hasn't been the greatest over the long term.
No, that's true. And the other problem is that you go to a financial advisor and they'll do you a statement of advice, and that'll cost you $5,000. So it's quite a lot. I mean, it can be quite expensive.
Yeah. Well, the move away from sort of percentages to per hour or upfront fees, it's a better system because it's more transparent. But the upfront fee is so large, a lot of people balk at it and just say they won't do it. I mean, it's a bit like I've been looking at retirement villages in Queensland for a family member. That's been a part of this trip. And I hadn't realised that the whole model is this sort of land lease where you get to buy a house in a retirement village for a discount to what the market value is, but then you got to give Lend Lease or Avio or whoever it is 35% of the sale price when you sell 10 years later. So the whole business model is based on we'll take 35% of the price. And people lap it up. Prices are going up. There's waiting lists. People love it because they think they're only paying $600,000 for a house. But if you actually run the numbers, it's massively expensive. But the whole attitude is, well, I'll be dead by then. I don't care if you take 35% of my fee. So it's a massive percentage fee they're taking, far bigger than any other fee for any other industry. But you're basically backloading your rent payments and getting a cheap access. And because the owners of these retirement villages own all the bricks and mortar, they are very asset rich. I mean, they own billions and billions of land because it just keeps going up and up and up. And you own it, and you're just renting it out to people who come in on the cheap and pay you an exit fee of 35%.
So what that is, in fact, is a form of inheritance tax. And a lot of these deals that exist in particularly retirement villages where they've got, back-ended, where you have to give the owner of the retirement village a big part of the capital gain that's being sold on the sale of the unit, is basically what you're doing is you're making your kids pay it after you die. And the other form of that is where you buy the house or the unit, but you don't buy the land. And so you're renting the land from the owner of the retirement village, and you own the house, which is a much cheaper proposition.
Well, we had a look at one of those ones in Maroochydore run by Gem Life, which is recently floated. $1 billion company on the stock market, a rare float along with Virgin. And that's their model. It's amazing. It's beautiful. It's opulent. Looks fantastic. They own the land and you're just buying the building. So you are still getting the upside of the building value, and it is pitched at a wealthier market. It's a bit like living in a hotel. But yeah, it's interesting. Separating ownership of land and buildings is an interesting model.
But buildings don't go up in value. Only land does. Buildings go down in value, like cars.
Well, yeah. Well, usually it's valued as a package. Yeah, that's right. So, Gem Life has certainly, made a lot of money with that model, and they're obviously very land rich, whereas everyone else in the industry is on the land lease model, which interestingly has been smashed in Victoria because VCAT came out and declared that exit fees are illegal and that they're a breach of the Tenancy Act. And so poor old Lifestyle Communities, their share prices crashed from like $16 to $4 because everyone's thinking they're going to have to repay everyone's exit fees. Well, that is that's the vast majority of the revenue based on that model. So the Victorians are going to have to sort that out as to whether these exit fees are even legal. Adele Ferguson's run a massive campaign on that issue, and then VCAT actually came out and went bang. Poor old Lifestyle Communities, which had Australian Super as their biggest shareholder for a while, the shares got absolutely crashed. But it's the whole retirement living space. It's very interesting. I've been enjoying looking into it, and I hope we get a few listener questions in the future about it because it's a very steep 35% fee, but a lot of people love it because it's affordable housing, particularly for single women. I keep saying, who lives here? And they say the biggest category is single women. Husbands have passed or husbands in care. They love the community sense. They love meeting in the clubhouse, the bus tours, a real sense of community. And it's a very, very attractive proposition for over 70-year-old women in particular. Sunshine State, who wants to be in freezing Melbourne in winter?
I reckon a lot of these business models wouldn't exist if we had an inheritance tax, because they've jumped in and replaced the inheritance tax.
Yeah, and the land lease model also sneakily gets around stamp duty. So you avoid the stamp duty because you're not buying freehold. And in some examples, they even pretend they're caravan parks and even get around paying full freight on council rates. So the sector's been very tax efficient, in the way they structure to not only there's no inheritance tax, but if you can avoid stamp duty and not even pay full freight on land tax and even council rates, then that's a bigger margin, less taxes for the big operators like Avio and Lendlease, who are the two biggest. Lendlease is trying to sell at the moment, and Avio is tipped as being a likely buyer. So watch this space.
Now, that's it for today. Thanks to everyone for listening to today's episode of the Money Café. Now, I won't be back next week. I'm going to replace Stephen in Queensland and attend a conference at the Gold Coast.
You're not looking at retirement villages, Alan?
No, I'm certainly not. I'm not retiring and not going to live in a retirement village. But next week will be James Thompson and Stephen Mayne without me. But send in your question to them and they will answer it together by emailing themoneycafe@eurekareport.com.au. So I'll see you in a fortnight. Until then, I'm Alan Kohler, founder of Eureka Report and finance presenter and columnist for the ABC.
And when the cat's away, the mice will play. I'm Stephen Mayne, and we'll be back with James Thompson next week.